Everybody, welcome to the 71st week of the Thursday Throwdown. And oh my gosh, I wanted to say Thirsty Thursday, but yeah, I'm thirsty. But we've got Adam Boatsman from behind the Resolute desk in Hilton Head Island. We've got Jack Santaniello. Hopefully he doesn't fall. I don't jump, Jack. I mean, like, please, we appreciate you. The fact that you can do all kinds of aerial acrobatics on the top of that building, but just be careful.
I'm trying to lean forward. Don't make me laugh and make me fall backwards. So I'm in good
please.
Right now. No tethers, so yes.
I'm surprised you have Wi-Fi signal up there, though. Maybe it's better up there. I don't know.
I'm surprised you can hear me because it's very windy up here.
So, all right. So we're going to be talking about taxes. We're going to be talking about ERTC. There's still some PPP craziness going on. I had one where somebody got denied by the SBA, wants to contest it. And, that's probably not the first time, but Robert Mayetta has done a good job in arguing with his bank. But one thing that we did say to this person, it's a private practice medical company or medical office, but go back to your bank and work through them. So anyway, we'll talk about whatever you guys want to talk about today. You know what the drill is. Hit the Q&A. Hit us up on the chat if you have questions. And hey, just so you know, hey, America and everybody else is going to be at the Tokyo Olympics. I don't know if they're going to have any spectators there or not, but supposedly the Olympics are going forward. Kind of a weird year, huh?
Yeah, it sounds like it's a minute by minute thing because of there's COVID and maybe the Delta variant that's running around inside Olympic Village. So as of this morning, I heard that, there's, and I don't know if this is just, speculation and kind of just sensationalism. It seems like it's already too late to kind of call it off. It's like if people are there and they've been there, they're already sick or they probably already have it. They've been exposed. So it's like, they made that decision, risk decision a couple days ago, a couple weeks ago. So we'll see. But yeah, I'll be watching television to see what happens. It'll be some good stuff.
Yeah. Opening ceremonies this weekend, I think, right?
Yeah, there's been some. The women's team, unfortunately, our women's team has already lost. I think it was 4-0 to Denmark or 3-0. It's very embarrassing.
They just got clobbered.
They did. So, but it's recoverable. So fingers crossed. Fortunately,
we have a whole bunch of other sports too. So, anyway, I was lost to Sweden. Thank you, Mark. Yeah, it's good that somebody's paying attention out there. So Adam, anything on your mind from latest ERTC stuff that we've been seeing?
Yeah, so a couple things. First off, to repeat, I am normally extremely aggressive, and I still plan on being so, but I do want to draw the distinction between PPP and ERC. With PPP, there was a lot of hemming and hawing around, do I need the money or do I not need the money? And you were applying for the money prospectively. Like you didn't know if you needed the money or yet not, and you applied for it. So then when it came time to forgiveness, there's a lot of him and hawing about, did I really need the money in retrospect, blah, 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 what's going to happen. And the government was pretty clear. They said, we're just going to assume that you needed it. Don't feel guilty. And everybody said, woo. Well, with the employee retention tax credit, yeah, so another key difference between that program is that it was administered through banks, but then backed by the SBA and then ultimately paid by the SBA. So the SBA really wasn't dealing directly with the end user of the money. In the case of the employee retention tax credit, that's literally going to the same guy, not technically the same guy, but the same department that audits you and, basically assumes that you're guilty until proven innocent. So with an equal amount of vagueness, you've got the employer retention tax credit, which in some which only has a forward perspective view if you absolutely meet the revenue reduction criteria, meaning like, hey, I'm down and I want a prospective credit to be refunded to me in the quarter that I'm in. It's pretty black and white on the revenue reduction criteria. So when it comes to the gray area, which is I didn't meet the revenue reduction criteria, but I could probably make a case under the exception criteria, which is what I'm going to talk about in a second. I just, we're proceeding cautiously in the sense that, hey, it's a different department. It's the IRS. Even though tax courts typically err on the side of the taxpayer these days, if the guidance was vague, it's still the IRS. They've got, they have not come out and said, oh, by the way, we're going to assume that you were right. We're not going to audit this at all. Instead, they went the opposite direction and said, we're going to increase the statute of limitations for which we can look back to an unprecedented 5 years. So it's just, we want to make sure we get it right. So when I come across as cautious, like, remember, I love to be able to say yes. So it's just that it's still really gray that's out there. So from the exception rules, which again, to remind everybody on the call, that's basically, I didn't meet the revenue reduction criteria, which is only going to apply to 2020. So I didn't meet the 50% down quarter-on-quarter comparison, but could I qualify for the exception? And the exception basically says the government shut me down or somehow indirectly shut me down. And because of that, I experienced a loss in I experienced a loss in revenue. I just didn't experience the 50% reduction. So, again, the example that's actually cited in the guidance, really easy to understand, restaurants may not have had a 50% revenue reduction in the period that they were shut down on a North Carolina order. However, their capacity was reduced, and the fact that they couldn't dine indoors for a period of time, and then even when they could dine indoors, they were limited in capacity. So pretty easy case to make, given that, hey, that's actually an example in the legislation. So that's an easy one. Who qualifies for that? I've seen a couple people on the call that are actually on this call now. It's bars, restaurants, salons, gyms, movie theaters, even within medical, the fact that medical was effectively shut down to not spread COVID except for emergency procedures. So medical is going to qualify. So, those are the pretty easy black and white ones in the sense that, hey, it's still an exception, but it's pretty easy black and white ones. So we're going to go after those first at BGW in terms of going back and getting the credit. However, even within that, I think you got it. It's not that you have to be careful. It's more like you need to support your position. So we have, one dental client that has a bunch of practices. He did the right thing. He shut down all his practices, but kept emergency dental open. Pretty easy for him to identify emergency dental. I remember him calling me in the middle of all this crap saying, man, it's such a struggle to do the right thing because I'm hearing from my peers, they're just staying open. They don't give a shit. Sorry about my language, Gary. They're just staying wide open, So point being, if I was the guy that ignored the government order, I just would be real careful about then applying for the credit that was directed to me due to a disruption due to the government order. So that's a long way of saying that if you were impacted by the government order, but you ignored it, I just would tread cautiously because it's going to be tough for you to support your case because you're going to have to produce some information around your reduction upon getting audited. So easy ones are phase one, directly shut down by government order. The second round is I wasn't directly shut down by government order, but my supply chain or customer chain was shut down due to government order. So in this case, round two, we've talked about it in the previous call, but that would be the litigation attorney. That, the place where you transact business is the courthouse, and the courthouse was shut down by government order. So you're in. If you were someone who supplied medical, meaning, we've got a client that sells orthopedic braces. They sell them to orthopedic surgeons. Orthopedic surgeons shut down. Okay, you got a case. If you were a supplier, say you were like a small meat supplier to the restaurant business, you got a case. I noticed on the call we've got both a salon and a salon products provider. Both you guys are kind of ancillary. You guys probably, well, the salon for sure has a case. The supplier, Eric, that's you, has a case based on the fact that the place where you transact business was shut down. It doesn't kind of matter that you might have pivoted to online sales. You still got a case because the salon was shut down. So you're like your primary mechanism for selling was shut down. So you got a case. That's gray area, meaning they haven't given interpretive guidance, but that's how we interpret I wasn't directly shut down, but I was still impacted. The other place where you would be directly, where you could make a case that you're impacted is the case where your supply chain was disrupted. But with the supply chain disruption, that isn't like I couldn't get crap from China. Nobody could get crap from China. We're taking a little bit more of a literalist approach, which is my primary supplier was part of the Defense Production Act and repurposed their production to make PPE, and I couldn't get my stuff because they stopped manufacturing my stuff. Therefore, there was a scarcity. So on the supply side, we think it's a little bit tougher to make the case, but there may be something there. So that's where we're going to, and that's where we're going with kind of phase, 2, meaning like there's the no-brainer stuff, you were shut down. Phase 2 is, hey, you got a pretty darn good case given the current guidance. Phase 3 is the stuff where I'm really mad about it, but I didn't write the rules. Those are the I would call, if I was Donald Rumsfeld, I'd call them the indirect cases, or the unknown unknowns, or whatever. Jack will probably laugh at me at some point. But that's a case where, well, not technically. So to give you an example of not technically, he's usually a long time listener, and it's like, look, I just want to wait a little bit longer to see if there's a case, one way or the other. We've got a client that sells and services cash counters in branch banks. A branch bank, a branch, like, financial services were considered essential. So they were not shut down. It was Bank of America's decision to close the branch. Like, nobody said you have to close the branch. Like, they made the decision to close the branch. Like, it was good guidance. CDC probably even recommended it at some point, but there was no specific order, I believe, that said, thou shalt close all branch banks to anything. And in fact, you could still go through the drive-through ATM and, deposit cash if you wanted to. Like, it wasn't like you went to the drive-through ATM and said, here's, my stack of hundies. And they said, no, I can't take those. There's COVID on them. Point being that, look, did you really have an impact due to the fact that Bank of America made the decision to shut down? Absolutely. But did the government force that? The government's position would be no. We didn't force that. Therefore, if you really were disrupted, you would qualify under the revenue recognition standard. You got another guy that supplies NASCAR teams, man. It's like, geez, this really, like, if I was writing the rules, I would say you absolutely qualify. But the government's position, we think, as it stands right now, would be, well, no, we just said that you couldn't go to a big event. NASCAR still ran, they just delayed. Therefore, if you really had a disruption, you should meet the revenue test. So it's that third phase that we're just like, look, let's just proceed a little bit more cautiously on this third phase, given that the IRS is going to assume that we're guilty until proven innocent. Let's just wait a little bit longer to get some guidance, since, it's the IRS is going to have 5 years to open this back up. So with that, I will stop the tirade on the employer retention tax credit, switch gears a little bit to taxes.
Wait.
There's a lot of, sorry.
Hold on.
Okay.
There is an ERTC question that I want to address while we're still on that train track, if that's okay. You
Okay.
cool with that?
Choo-choo.
All right, here we go. Robert Mayetta, Survival CFO, thank you very much for the polo shirts on celebration of your 2-year anniversary. We appreciate you, and you always have great questions. So here's the question. Does the Q1 2021 revenue figure only compare to 2019, or can we compare it to 2020? For example, with revenue numbers of Q1 2019, $873,000 for Q1 2020 equals 1.6 million. Q1 2021, 1.046 million. Do they qualify? 2021 is more than 20% lower than 2020, but not 2019.
It's the way that I read it, it's 2019 unless you're a new business, unfortunately. Jack, I should talk longer so Jack can fact check me. But I equally got all excited about that. And it's like, no, it's 2019, unless you're a new business.
I think that's right. I mean, it was originally intended to go back, and then the businesses that were not in existence are like, wait a minute, what about us? So they had to pivot and make an adjustment in that.
Yep.
So speaking of going back, Jack, do not lean back. Just please don't lean back.
Yeah.
All right, go ahead. Let's move to taxes.
Yeah. So on the tax front, kind of big news was, the infrastructure bill didn't pass. Well, it was a test vote. The Republicans wanted some time to work out some final details. And I think there were 10 or 11 Republican senators that said, if you give us until Monday to work out some final details, then we'll vote yes. So that, I would hope, would be a positive sign that they will pass a bipartisan infrastructure bill. The only thing in the infrastructure bill is that related to taxes is an enforcement provision, meaning they'll beef up some resource, going back to the ERTC. They're going to beef up resources at the IRS to go after underpayment type folks, or underreporting type folks. So there's no actual tax increase as part of the infrastructure bill. So if you get to Boatsman theory, which is the same thing as a Jack theory, a lot of our clients are talking about, oh my gosh, Biden's taking the position that if they do a different deal on, that doesn't require bipartisanship, that's going to have tax increases on it, and it's going to be capital gains tax increases. And he's already said that's retroactive to April, so we're screwed. Pretty much everybody that I talk to says there's just no chance in hell that will stand. So I'd stop. First off, there's nothing you can do about it anyway. So you probably could write some sort of transaction agreement that says, hey, I'm willing to agree to this, but for a tax law change retroactively, then we'll renegotiate or something if you wanted to. But everybody that I talk to in the business says there's no way in hell that's going to stand the way that it stands. But independent of that, this is just more of my speculation. As Gary, I think said at the top of the call, I'm in Hilton Head right now. And it's funny. When I say it's funny, it's actually not funny in like a ha-ha way. It's funny as in like a, boy, that's really pathetic way. favorite thing to do when we're in Hilton Head, at least one night, is go to the Mellow Mushroom at the entrance to Sea Pines. You know, been a tradition in the Boatsman family going back for well over 10 years. So we've got a lot of people here, and we were going to go to the Mellow Mushroom, and we thought, well, it's going to be hard to get a table, so let's just sort of take out. If you call the Mellow Mushroom right now, what you get is a recorded message that says, we're not answering the phone because we're so short-staffed. There's no chance in hell we could even get to your order, even if we wanted to. If you come in, good luck. I mean, literally, it's about this direct. Good luck. It's going to be a long wait. So really, your best bet is just come here and maybe we can help you out. So that, I mean, at the end of the day, you know, that I believe is somewhat correlated to the enhanced unemployment benefits. So I just feel like there's going to be a lot of reluctance to do anything more on offering people help, which really the remaining infrastructure stuff that the Biden administration want to focus on. We can debate the merits of is it a good idea or not, you know, all day long, but it really boils down to an investment in human capital as infrastructure, which is like, you know, educational programs, you know, blah, 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 you know, help. Man, I just, you know, I can't see like Kristen Cinema, I think I said that right, and Joe Manchin getting behind helping people improve their lives when we can't fill the jobs we got. You know? So, you know, until they kind of get us back, until we really get a look at what truly is zero unemployment when they remove the enhanced unemployment benefits, I just see a hard time with any reasonable person kind of getting behind, let's jam through tax reform that's really targeted towards paying for some form of a human/social program when there's open jobs that are decent paying that were filled 1 year ago. Like it didn't 1 year ago, you did not, well, more than 1 year ago, a year and a half ago, this didn't happen at the Mellow Mushroom, and now it does. There's not a whole hell of a lot that freaking changed besides COVID and enhanced unemployment benefits in that time frame. So that's just my 2 cents on why I don't think, you know, there's going to be any real danger of tax legislation in calendar year 2021 that impacts 2021.
So while we're talking about that, Chris had this suggestion for you, Adam. He was at the Mellow Mushroom last week and he said, go to Doughboy Pizza. It's way better. Okay. So thank you, Chris.
appreciate that. I did bring my own barbecue. I'm not even gonna mess with the barbecue place. I can't remember the name of it. There's also a great barbecue place, the entrance to Sea Pines. We're not even gonna mess with that place.
So the other thing that is probably worth touching on, Adam, is just this whole North Carolina circus with the Senate not doing jack squat on the deductibility of the deductions on PPP.
Yeah. So I'll have, maybe Jack might have more to add on that. So I'll talk really slow to see if Jack, you know, wants to talk more on that. But you know, it is really sad and pathetic. So the position that we're going to take as a firm is that, look, you know, we got to file the tax returns eventually. So everybody that's been holding on filing a tax return so they wouldn't have to amend it later on, you know, our guidance is going to be, let's just go ahead and file it, you know, in the middle of August, because there's, you know, the likelihood they're going to pass something before the September 15th deadline, you know, in time for us to react to it is just getting smaller and smaller, you know, as the window closes. I could go on a long tirade, but for your sake, Gary, I won't.
Well, you'll be happy to know I sent a text to Dan Bishop, and I said, listen, I know this isn't your fight. You're in the US Congress, not in NC, but this thing that's going on in the Senate is ridiculous and it's embarrassing. You know, what can we do? Because we've got to move, like Adam said, we've got to start filing things that we've been delaying and holding, hoping that the Senate would wake up from their slumber and vote with 46 other states, I think, or something like that, 46 or
47. Yeah.
So, and I have not received a response back from him yet, which is unusual because normally he pops back within 24 hours. So anyway,
there's really two options, right? So either they address it or well, three options. They address it, they don't address it, or they kick the can down further and extend the deadline to deal with it. And I say that because the extension of the deadline usually is not a high probability or possibility, but I think that if pressure continues to be put on them, there's a possibility that might get pushed back. So that way, I mean, it creates all kinds of problems because now you have bifurcated timelines of what you file and delays and et cetera. So I agree that I think that, you know, what our suggestion is also is to go ahead and file with the understanding that you may have to amend, hopefully, I guess, in most cases. But yeah, that's just not, it's unfortunate. And you would think that peer pressure and constituency pressure would prevail and get them to act, but so far it hasn't happened.
I would say if you take 5 minutes, Google your senator and beseech them. Any other questions out there? Robert, I knew we could count on you.
So let me throw out a few things while we're waiting. Thank you for the advice on Mellow Restroom. It sounds like that we need to, because we may be going down there one last trip before school starts back up. So it sounds like you need to order dinner at lunchtime, and then it should be ready.
That's what we did.
Yep. A comment on the unemployment. What I'm hearing also, in addition to the incentive to sit on your couch that remains, is that what people have done is, and because they had to, out of necessity, desperation, is finding other jobs that were paying, and they ended up liking those jobs better than their prior jobs. So I think there was in the beginning, an assumption that, well, surely, even though if we furlough or lay those workers off officially, they are surely going to come back. And I think that in some cases, people are like, oh, okay, well, you know, I was looking for something else to do, and now I found it. So, and that applies, I think, more so on service providers, for example, you know, the staff at hotels, cleaning staff, and those kind of jobs. At least statistically, that is what I'm told, or I've read, that is happening. So there's that. We talked about this previously, but as you guys know, that the PPP questionnaire, forgiveness questionnaire, is no longer required. And what I didn't know when we talked about this last time is that for those of you that are in the general contracting world and pay your dues to the Association of General Contractors, thank you so much. If you haven't paid your dues, please pay your dues, because apparently they were the leading force behind, and actually filed a lawsuit that requiring the questionnaire, or at least they put enough holes in it and questions as to the validity of being able to ask certain questions, that supposedly is the cause of the downfall of the use of the questionnaire and having to fill that out. Now that affects mostly larger loan amounts, but you know, it trickles down. And then speaking of kind of the lower end of numbers, the SBA announced a couple weeks ago and re-announced, I think last week, that there's this portal that is going to contain the forgiveness applications, or the acceptances of forgivenesses, and allow better communication between, because if you remember the process, the SBA, but also the bank, has to approve the forgiveness. And so it's an easy way for the bank to say, yes, we're good to go on the forgiveness. And the SBA seems to be taking a back seat to that in some of the lower numbers, the 150 numbers and below, in order to expedite the process. And if you recall from many months ago, many weeks ago, statistically, there is a high percentage of loans to be forgiven in the lower amounts. So higher percentage, lower amounts. So for purposes of efficiency, they're trying to find ways to speed up this process. Now, that doesn't mean that you can throw away all your paper and everything else that you use to do the calculations or anything like that. But what it means is if you haven't not received forgiveness, the forgiveness notification yet, this may speed up that process. Interestingly, there are still a lot of businesses that have not even applied for forgiveness yet on PPP1. So, you know, it's again, getting down to the time that you probably should start thinking about pushing that forward. We would all hate for there to, it's not like they're going to run out of money, but you know, if they're going to start putting pressure on people to get it done or just forget about it. And then unrelatedly, I don't know if we have any questions yet, but unrelatedly, let's talk about non-competes for a moment, because they're a very powerful, powerful weapon in some cases, but item to have with respect to employees, with respect to owners, et cetera. And it has traditionally been a concept of state law regulated by states. So that's why when someone says, hey, is this non-compete enforceable or not? It's like, okay, well, first question is, under what state law is this agreement governed by? And it varies in different states. And in California, it's probably the most difficult state to enforce a non-compete. But the reason why I bring this up is that, and I didn't know this, but apparently in President Biden's bid for the presidency, there was promises made that he was going to nationalize the effort to reduce the potency of non-competes on a national level through the Federal Trade Commission. And that has come up in the past 7 to 10 days again, that he's reiterated his promise and is in the process of, or has directed the Federal Trade Commission to begin to nose into this process. Now, you know, jurisdiction over the federal jurisdiction over private companies located in a particular state, that's a huge hurdle. But just wanted to alert you to that for two reasons. One is there may be an additional layer coming, but they're probably not, or at least in a delayed period of time. But on the non-compete issue, we get a lot of those, and it's just what has happened is a business or a client has taken a form that was developed maybe like 5 years ago, and that's what they've been using as an employment agreement, and it hasn't tracked the evolution of law in that particular state, and or is not applicable to that particular employee with respect to geography. And now I'm going way into the weeds of non-competes, but the two essential components of non-competes for validity are the geography and the time. And they kind of counterbalance each other, but not necessarily, it's not an equilibrium kind of thing. And so once you try to restrict someone who has only responsibilities in Charlotte, has only talked to Charlotte customers, lives in Charlotte, it's a geographically based business that he does for even a national company. You can't say, well, you can't go work for a competitor anywhere in the United States for 5 years. It's unenforceable. And it's not that it gets revised, it gets thrown out in most cases. So anyway, again, going way down into the weeds, but it's just things, you know, that I've seen recently that have come up when, you know, and it links back to the fact that I was saying people are changing jobs. It's like, well, people are changing jobs and they're going to competitors. And now we have clients coming to us saying, can we restrict that former employee? Or the reverse, you have employees coming, people who are seeking employment coming to us and saying, can my former employer really enforce this? And it just depends on what is in writing, but also depends on the factual circumstances of what they were doing, for who, when, et cetera. So anyway, I will stop my diversion into restrictive covenants.
Well, we got a chat from Mark saying regarding your comment, Jack, on folks finding other jobs, labor participation rate was 63.3% in March 2020, 61.6% now. The source is fred.stlouis.fed.org. Still a lot of folks collecting checks versus working, considering the demand for labor. The numbers seem to prove that out, Mark. Speaking of Mark, I got to do a quick shout out to Mark Smith with, I think it's called Airright, Work Right. So this standing desk that I love, as you notice, it's moving down and now it's moving back up. The problem was a couple of weeks ago, the motor stopped, and this thing was probably out of warranty. I got this from my big younger brother, Adam Boatsman, and I love this thing, but it's like, it's stuck. What do I do? And so I wrote the company, and I don't know if this was because Mark intervened or not, but I said, hey, here's the deal. I don't even know if it's in under warranty because it's got a 2-year warranty. They shipped me a new one. These are like over $700. They shipped me a new one, asked me to ship the old one back. I had to kind of mess with it because it was stuck in the up position. So I was able to make it work, but it's about 50 pounds. So it was a little bit awkward, but for free. I mean, like, that's unbelievable. I'm like, I cannot believe that's a contrast compared to the Mellow Mushroom service of maybe we'll serve you, maybe we won't. You can try your luck. So anyway, shout out to Mark Smith and Work Right. Thank you very much. I love this thing. So, and thanks for helping Adam too. So,
yeah, you're welcome. Yeah. So thank you for that, Gary, and I'm sure Mark will appreciate it. Can I hit back on Jack's point about non-competes for a minute?
Yeah.
I think, probably where you could potentially see this in a wave too is that, what we're finding is that more and more people kind of took a hold on asking people to come back in the office until the summer, and then it was kind of voluntary, and now more and more people are saying, hey, it's going to be after Labor Day, and then probably another round's going to happen in 2022. The point being that I don't know, that's been at BGW, that's been a very difficult internal debate over what's the right answer. But I will tell you, some of our concern has been driven, obviously we got the cultural side of the concern in both directions and the productivity side in both directions. But, part of the concern is, look, I mean, if you're the guy that says, hey, your butt needs to be in the seat, period. Okay, well, like, what's to stop me from going and looking elsewhere where my butt does not have to be in the seat, for the same money or perhaps even better money? That's a consideration. If you're either, only vaccinated people back, or, it's going to be the Wild West around here, that I think that's a consideration, both directions, in terms of, even all the liability stuff aside around, look, if that's kind of a big deal to me, then, and it's still a big deal to a lot of people, one way or the other, then, all of a sudden I'm taking a job elsewhere. And this kind of gets back to Jack's point around the non-compete. It's like, as a business owner, I relate to the non-compete argument in the sense that, I love Gary, and,
I love you too, man.
If I was right. So wait till I say this though.
Okay,
if I had hired Gary to develop software for me that I then patented, and then he took like the vital algorithm, like this actually happened, like this, I think this is the reason like why Tesla sued Google over the self-driving autonomous car. It's because a guy left Tesla that, learned all their shit and then took it over to Google. Well, if Gary does that and my product is software, we're going to court and I'm winning, most likely, regardless of where Gary goes to work, because it's my algorithm. if at the same time, Gary works for BGW and I give him all of my intellectual property, which is not patentable, but still really good freaking ideas around tax planning, that's now in Gary's head. Like I can't, when Gary says, "Hey, Boatsman, you suck and I'm going to go work for, BDO," not that he would ever say that. I can't say, "Well, cool. I'm going to need to hook your head up to the vacuum cleaner and I'm going to need to suck that information out of you that I gave you because that's mine." I can't enforce. And so the only thing I've got is this non-compete agreement to protect me. So having the whole thing thrown out, I mean, so my point of view, like I totally get where Jack's coming from. Look, making sure that Gary can never get a job again, ever seems bad. But at the same time, I feel like I need some protection. So, I would encourage everybody to really heed Jack's advice to dust those babies off, especially as, there's a good chance you're going to see a wave too, as people are, returning to work and saying, whoa, this wasn't as good as I remembered.
Yeah, we were having experience similarly back to the first part of the conversation, which is, what do you do here with varying levels of, I think, personal feelings about personal safety with respect to COVID, vaccinations, people who are not vaccinated, but also obviously with clients. And they're saying, well, what's the best route? And there really is not an answer that we can give necessarily, even legally, to say, well, if you do these things, you're okay because you're permitted to do all of these things. I think there are some guidelines, but I think about my litigators into the rest of this year and into 2022. They're going to be a very busy group, and enforcing or defending and or trying to defeat certain policies that were put in place that may be deemed to be, too restrictive or prejudicial and non-accommodative. We had a client had a situation where the person did not want to come back to work and came to the employer client with a doctor's note that said, well, we've come to the realization that this patient works better at home than they do at the office. And so we believe it's a reasonable accommodation to allow this person to do that a few days a week. We're not saying every day, we're just saying a few days a week. Like, okay, now that situation has gone to a totally next level with respect to reasonable accommodations for a medical condition. So, there's those things that everybody needs to think about too with respect to policies and when you say yes or no to certain things, because most of us are like, okay, is the doctor a friend or a relative or something that wrote a doctor's note and now created this problem, or is it a genuine concern? And you can't ask certain questions when you get a doctor's note. So you have those issues to deal with. And then the workforce thing, again, a lot of litigation coming our way for all of us. I do have a nugget of information that is very valuable, and I will assume that the people on here are in positions of management, or at least are protectionist of their employers or owners themselves. But something to consider is when you protect your customer list, is to embed a fake customer that ends up coming back to you as an owner or wherever, in that phone numbers, et cetera, are public information for the most part, essentially, right? That we have phone books, et cetera. It's hard to prove someone poached information, unless the only way they would have gotten that fake name is if they poached directly from that database that has that fake name. So this is what I had a client who was in the phone book business, so provides those, the little skinny ones that you get if you used to get that you lived in Matthews or, in other places like that. You get at that time, I think it was Alltel, maybe Bell South, but you get this ancillary one that has all kinds of advertising in it. But there would be fake numbers and names in there. And so if someone else published a phone book and it had that name and number in there, then they would know they got where the source was from, because there's only one source, and rather than copying it from the public records. So there's your free legal advice that may save you many thousands of dollars in legal fees, because you will have literally the smoking gun in your hands when that happens. And it does happen. And so anyway, there you go.
That's good. I once subscribed when I was in college to a trade journal called Print Magazine, and it was not inexpensive, but they got my name wrong, and it was Gabby Frey. Well, it kind of fits, but Gabby. So I know whenever I get a solicitation for Gabby Frey, I know exactly the source.
Yes, you can imagine how many variations of my name. I'll tell you a little secret too. My real name isn't even Jack. So there you go. It's a nickname that I inherited because my father's middle name is Jackson. So yeah, when I get Joseph or some variation, the best is Jack J. Santaniello. And I know exactly where that came from. It actually came from a database from Chapel Hill that got it wrong a couple decades ago. So I know that's the genesis of that. That's, yeah.
Well, Kansas State and Chapel Hill, evidently. Any other questions out there? Thank you, everybody, for being on there. Mark, thanks for your, it's good to know about alternatives to mellow mushroom. Doughboy, you have to check that out. Oh, that was from Chris. Mark was the one that had the stats. So thanks for being on that. Same way to you. Robert Mayetta, appreciate that. And by the way, yes, we lost to Sweden, not to whomever else. So Mark was paying attention.
They're neighbors, Denmark, Sweden, and very much rivals. So okay.
It's somewhere over there, across the pond.
That's right.
All right. Adam, any parting thoughts before you go hit the beach?
No, just keep the head down.
All right, Jack, thank you again. Do not fall backwards, and we'll look forward to seeing everybody next week. And if you were late on this, we will put it up on the BGW YouTube channel. See you. Bye-bye.
Thank you. Bye.
All right. See ya.